Welcome to SS2 Accounting. Today we begin company accounts, the accounting for limited liability companies. Companies raise capital by issuing shares. Understanding the accounting for share issue is crucial for WAEC. Companies in Nigeria are governed by the Companies and Allied Matters Act, 2020 and are registered with the Corporate Affairs Commission, CAC. Share capital has several important classifications. 1. Authorized share capital. The maximum amount of share capital a company is permitted to issue as stated in its Memorandum of Association, also called nominal or registered capital. 2. Issued share capital. The portion of authorized capital that has actually been issued to shareholders. 3. Called-up capital. The portion of issued capital that shareholders have been called upon to pay. 4. Paid-up capital. The portion of called-up capital actually received from shareholders. 5. Uncalled capital. The remaining portion of issued capital not yet called upon. 6. Calls in arrears. Called-up capital not yet paid by shareholders, deducted from called-up capital. 7. Calls in advance. Capital paid by shareholders ahead of the call schedule, added to paid-up capital. Under, 2020, Nigerian companies can issue two main types of shares. 1. Ordinary shares, equity shares. Most common type, holders are the true owners of the company. Receive dividend only if profit remains after preference dividend. Dividend is not fixed, varies with profit. Voting rights, 1 share equals 1 vote, elect directors. Ordinary shareholders bear the highest risk but enjoy unlimited profit potential. 2. Preference shares. Fixed rate of dividend, stated as a percentage of nominal value, e.g. 8% 1 Nigerian naira preference shares. Dividend paid before ordinary share dividend. Types. A. Cumulative, if dividend not paid this year, arrears accumulate and must be paid when profit allows. B. Non-cumulative, means dividend is lost forever. C. Participating, receive fixed dividend plus share in residual profit. D. Redeemable, company can buy them back at a future date. Key share issue terms. Nominal value, par value, face value the stated value on the share certificate, e.g. 1 Nigerian naira, 0.50 Nigerian nairas, 0.25 Nigerian nairas. Issue price, the price at which shares are issued to investors, usually equals or exceeds nominal value. Premium, the excess of issue price over nominal value, credited to share premium account, the capital reserve. Example, 1 Nigerian naira share issued at 1.50 Nigerian nairas 0.50 Nigerian nairas is share premium. Prospectus, document inviting the public to buy shares. Application, investor applies for shares and pays application money. Allotment, company accepts applications and allots shares, allotment letter sent. First call, second call, further installments due after allotment. Accounting entries for share issue, where payment is made in installments. On screen. Issue of 100,000 1 Nigerian naira ordinary shares at 1.50 Nigerian nairas each payable. On application, 0.50 Nigerian nairas. On allotment, 0.75 Nigerian nairas, includes 0.50 Nigerian nairas premium. On first and final call, 0.25 Nigerian nairas. Journal entries. 1. On receipt of application money. Dr. Bank A/C, 100,000 times 0.50 equals 50,000 Nigerian nairas. SIA application account 50,000 Nigerian nairas. 2. On allotment, shares allotted. Dr. application A/C 50,000 Nigerian nairas. SIA share capital A/C, 100,000 times 1 Nigerian naira equals 100,000 Nigerian nairas. Dr. allotment A/C, 100,000 times 0.75 Nigerian nairas equals 75,000 Nigerian nairas. SIA share premium A/C, 100,000 times 0.50 Nigerian nairas equals 50,000 Nigerian nairas. SIA allotment A/C 25,000 Nigerian nairas. balance of capital at allotment. Wait, let me restructure clearly. Share capital split. Nominal value 1 Nigerian naira equals 0.50 Nigerian nairas on application plus 0.25 Nigerian nairas on allotment, capital portion plus 0.25 Nigerian nairas on call. Share premium equals 0.50 Nigerian nairas on allotment. Journal entries. 1. Application. Dr. Bank 50,000 CR application A/C 50,000. 2. Allotment. Dr. application A/C 50,000 CR ordinary share capital A/C 50,000 application portion of capital. Dr. allotment A/C 75,000 CR share capital A/C 25,000 capital CR share premium 50,000. 3. Bank receives allotment money. Dr. Bank 75,000 CR allotment A/C 75,000. 4. Call. Dr. Call A/C 25,000 CR share capital A/C 25,000. 5. Bank receives call money. Dr. Bank 25,000 CR call A/C 25,000. Total share capital equals 100,000 Nigerian nairas, share premium equals 50,000 Nigerian nairas, total raised equals 150,000 Nigerian nairas. If a shareholder fails to pay a call, Dr. calls in arrears A/C CR call A/C for the amount unpaid. If shares are forfeited, taken back because payment not made. Dr. share capital A/C or nominal value of forfeited shares. Dr. share premium A/C if applicable. CR calls in arrears A/C. CR forfeited shares A/C the amount received so far as a reserve. If forfeited shares are later reissued. Dr. Bank proceeds from reissue. Dr. forfeited shares A/C using the forfeiture reserve. CR share capital A/C. Any remaining balance in forfeited shares A/C transfer to capital reserve. On the statement of financial position, share capital appears in the equity section. On screen. Equity and reserves. Ordinary share capital, 1 Nigerian naira each 100,000 Nigerian naira shares issued and fully paid XX. Preference share capital, 8%, 1 Nigerian naira each 50,000 Nigerian naira shares issued and fully paid XX. Share premium account XX. Retained earnings, revenue reserve, XX. Total equity XX. Summary of company accounts, issue of shares. Authorized capital, maximum permitted, issued capital, actually issued, paid up, actually received. Ordinary shares, voting, variable dividend, highest risk, reward. Preference shares, fixed dividend paid first, cumulative/non-cumulative/participating/redeemable. Share premium, excess of issue price over nominal value share premium account, capital reserve. Journal entries, application allotment calls bank receipts. Calls in arrears, Dr. calls in arrears, forfeiture and reissue procedures.